Thank you for joining for today's presentation. My name is Rob Libson. We are going to be discussing the PDT rules and the changes in the regulations here and the new intraday margin requirements. We want to do a brief overview just to provide you with some information on how the changes would affect you and what's available and how Lightspeed is handling that. And certainly we'll take some time for some questions here at the end here as well. Okay, great. Quickly here, disclaimer, this presentation is for informational purposes only. Nothing presented today should be construed as investment advice or recommendation by seller holding a security contract. Since we don't know everyone's investment depth or risk tolerance, we're not endorsing any specific trading strategies. Security-driven future trading involves financial risk or loss, not suitable for all investors. Each investor must consider whether this is a suitable investment, since you may lose all or more than your initial investment. Past performance is not indicative of future results. Lightspeed is not affiliated with any third-party market commentators, educators, or service providers on the website. Data, information, material provided for informational educational purposes only. This content neither is nor should be construed as an offer, solicitation, or recommendation of buyers selling securities or contract. Any investment decisions made by the user through use of such content is solely based on the user's independent analysis, taking into consideration your financial circumstances, investment adjustment, risk tolerance. Lightspeed does not endorse, offer, nor recommend any of the services or commentator provided, and any information used to execute any trading strategy is solely based on the independent analysis of the user. Okay, so understanding the expiring pattern day trading rule. What is the pattern day trading, the PDT rule? Some firms will still have this in effect. Lightspeed is referring to this as the legacy PDT. Firms were able to make the changes starting to June. Some have done it immediately, like Lightspeed. Some are still working through the process. So you would see a mixed bag across the industry here as people are adopting these new rules. Lightspeed has done it in some phases as well, which we'll talk about. But essentially, the day trade is defined as the buying or selling of the same security in the same day. Previously, you were required to have a balance above 25,000 to maintain to be eligible for pattern day trading status, meaning you were able to execute more than the required or amount of 4 or more day trades within a 5 business day. This rule has been removed from the SEC and by FINRA, the regulators, so no longer in effect. The PDT rules and guidance has been introduced effective June 4th, 2026. These updates modernize margin requirements for active traders and replace the former pattern day trading framework. Lightspeed encourages traders to review FINRA's official educational resources to better understand the requirements, the margin accounts, and intraday buying power considerations. So there are some resources provided by the government, the regulators, for this information, along with Lightspeed providing some of this information here. So essentially what is changing? PDT is eliminated. It's going to take on a risk-based approach rather than based on the number of trades. You don't need the 25,000 minimum deposit. Brokerage firms will establish a unique platform-specific minimum fundings and margin eligibility standards and risk controls. Rules are eligible to take effect June 4th with an 18-month grace period for brokers to have time for adoption. So you may see some firms have not integrated any changes. Lightspeed has done this in phases, so certain trading platforms and accounts are eligible, and certain platforms for us are still on the legacy PDT model. So Lightspeed here, we have our Lightspeed platform minimums for cash margin 1 and margin 2. We have introduced our own type of levels for suitability and for permissions. Margin 1, which will give you leverage of 1-to-1, so essentially no additional buying power. And then we have margin 2, which we are allowing with a $5,000 deposit. You have to maintain the balance of $2,000, I'm sorry, and then that will provide for the leverage of 4-to-1. So we have our 2 different margin levels, $2,500 for our base margin 1x, and then margin 2 will allow up to 4 times buying power, $5,000 minimum deposit. We are also allowing limited margin IRA accounts now for the $2,500, and then we also have some of the other details here. So we have explained the details of what our levels are cash, margin 1, margin 2, and legacy PDT. So intraday margin, 100%. The accounts with leverage available will be 25%. They will allow for intraday settlement. The cash account does not. That's the one-day cash settlement. Does it allow for short selling? Margin 1 and margin 2 allow for short selling. Cash accounts do not. And then allowable option strategies here as well. Lightspeed Trader Web and Mobile existing accounts are moving over. Lightspeed Trader Pro, we did a mass conversion for existing PDT accounts under 25,000 or by request. Accounts that have triggered margin calls by going below 25,000, we have moved them over as well. Sterling and our API platforms or Lightspeed Connects are on the legacy model on the legacy PDT rules as well. So certain platforms will be defaulted to certain models at this time as we work to integrate additional rules and processes in place here. This is the Lightspeed website here. Let's just expand this here so we can see we have this is the sign up for the webinar. I'm sorry. Okay, so we have created a new page here in our trading tab here called Margin. This is a really good resource that we have provided to give you some of this information. So you can see here, we have described our platform deposit minimum. So essentially the table I just had before. So we're showing the platform, the account type, the minimum deposit, and what the maintenance level will be here. So this is fully updated. We can see Lightspeed Trader Pro. We have cash, margin 1, margin 2, limited margin IRAs. We still allow for legacy PDT, and then we also have portfolio margin accounts. Lightspeed Web and Mobile will allow for the new margin 1 and margin 2 levels as well. Easy Sterling, Lightspeed Connect, DOS, and Silex are all still under legacy PDT as well. So we see our minimum deposits have been lowered for certain platforms, Lightspeed Trader and Web and Mobile, $2,500 for cash or margin 1, $5,000 for margin 2. Non-US accounts would be $5,000 minimum deposit. LLC accounts, corporate will require a higher $25,000, but can fall under the new margin model as well. And then we have the descriptions here. So cash, margin 1, margin 2, legacy PDT to see how the intraday works, the settlement, short selling, and option strategies. We've also displayed how the margin calculations will be applied. So you can see we have for long versus short, we have a table here, the type of security. So marginable approved stocks above $3 or below $3 will have different calculations. We can see the initial versus the maintenance versus the intraday margin level requirement. So the intraday will be your day trading if you open and close for the day. Your initial requirement will be if you hold something overnight on the first night, and then the maintenance will be what will be applied going forward, holding that position as well. The Lightspeed Trader software provides some valuable information on how a security is considered marginable and what that margin requirement is. You see these snapshots here, the difference between FIS, which is a leverage ETF, versus Tesla, which is a single name stock, or GBTC, which is a Bitcoin trust security, and we have some different requirements. FIS, since it's a leverage ETF, it's a 75% requirement. The 89% is the short requirement. So there could be some different requirements for long versus short. Tesla is 25%, so you can use your full 4 times buying power in that type of security. GBTC is 100%. It's a risky security. It has, based on the crypto, so there's some additional risk in there. So that's been determined to have a higher requirement. It's not going to be marginable. 100% is going to be required to hold that type of position. So the leverage calculations may vary by security and product type. If there's high risk or high volatility throughout the day, you can see an increase in that as well. Then we have our short positions. The initial requirement, 30%, and then or greater of $5 per share, $5 per share, or 30% of the market value. If it's below $3, then it's the greater of 250 or 100%. So there's some different formulas depending on the price of the security as well. Your intraday buying power is dynamic. It updates throughout the day based on several factors, including real-time market movement, open positions and exposure, unexecuted trades, unrealized and realized gains or losses, margin requirement changes, concentration risk, or regulatory and firm risk controls, or even if you're holding expiring options or options that are assigned to you. So there's some different factors involved to determine what your buying power is. And if the software is designed to limit your ability to exceed that for intraday, but there are some scenarios where you can cause margin deficits, and that would create that margin call. We have a link here for the understanding margin calls. If I click on that link here, that's going to bring us to where we kind of describe the various calls that would be created and how to satisfy these calls. We are working through some additional information, so this should be updated shortly with some additional calls that are possible and how to meet these calls. Generally, if you create a intraday margin deficit call, you would be able to meet through market appreciation, through P&L, through a deposit of funds always, or by liquidation. So there's several ways to meet these margin calls as well. Anyone that receives a margin call and doesn't understand it, reach out to our service team. We can review that for you. But typically, the main one you're going to see is the intraday deficit call, which we're going to provide more details on that as well. This is something we're working through with our clearing firm. The process is ever changing. We're learning more, and we're implementing different systems and risk controls to help alleviate these type of calls, but they're always possible. Now, please note, I did a full webinar on this last month or 2 months ago. This one is posted to the website, so you can view this recording here. It's fully, it gives a full detail of all these different parameters and information as well. But so please take a look at that. That's going to be really well descripted, a little bit less manic as I am right now. I'm sorry about that. I'm kind of all over the place here. But we just want to kind of just reintroduce the information and show you where the resources are. So we did provide links to these FINRA and SEC resources as well. So if I click on this understanding the new margin, that's going to bring us to the FINRA rules. So anyone who wants to read about the rules, how they're being applied, the basics of margin, transitioning to intraday margin requirements, all this information can be viewed on the FINRA website. So read up on these changes. It's very important. Then they provide some other links here for brokerage information for margin accounts. So you can see the margin requirements, how they're calculated, what happens if there's a change in your equity and how a margin call would be created, and then certainly know the risks and realities before you trade on margin. I'll read them again here. You can lose more funds than you deposit in the margin account. If you're borrowing funds, then you can possibly lose those funds. The firm can force the sale of securities in your account if a margin call is created and past due, or even at any point in time there's a significant risk, the firm can close the position to meet the margin call there as well. The firm can sell your securities without notice. We do attempt to contact you when possible, but there are certain scenarios where it might not be possible, so they can liquidate if needed. Sorry about that. Okay, I'm back here. So then we can see the margin agreements and disclosures. You should have those. Lightspeed does have the different disclosures and risk disclosures, and it is part of your initial application, your margin application, and then provide some changes on the intraday margin requirements and more information just on margin in general. And then we have the FINRA Rule 4210, provides some more details on background of the changes of the rules and how to view the technical details of the rules here as well. Lightspeed's working behind the scenes to make sure that we are up to date on all the risk monitoring, making sure accounts are adhering to their maintenance levels, their margin, available margin, to make sure that you don't create calls, but there are always going to be some scenarios where it's possible through losses, through possibly taking on positions overnight based on what you have available. So the software is not always going to prevent you. It's always up to the end user to know what positions you're taking, what orders you're doing, your buying power, but we are going to provide as many different processes to help with that as well. And we just have some other related blogs here as well, understanding the current rules or the post-PDT world, what do you need to know? Of course, your risk disclosure statements here as well. So take a look at this page. Once again, it's in the trading tab under margin, and that's going to provide you with a lot of this information here. But the main questions that people have, what are your new minimums? So once again, just to review, anyone looking to open up a new account, we have our new intraday minimums here as well. So $2,500 for cash or margin 1, $5,000 for margin 2. That's for Lightspeed Trader or Lightspeed Web and Mobile. Other platforms will have some different platforms here, different requirements. Can you guys still hear me? Okay, thanks. Yeah, so I don't see anyone typing any questions. I'm happy to go over anything again here. Once again, we're going to provide some more resources for the margin calls. If you received a margin call, reach out to us. Keep in mind the minimums here. So if you do fall below the minimums, if you fall below the 2,000 maintenance level, you would either have to refund the account to bring the balance back above 2,000, or you can convert it to a cash account. So we don't automatically switch that account type or your level for margin. It's going to generate that type of margin call, either falling below the 2,000 level or you're holding too much, and you would have to make a request to either refund, liquidate, or request to change your account type. If someone is currently has a cash account and they want to convert to a new margin account, you can email newaccounts@lightspeed.com, and we can provide you with a margin agreement for you to complete and submit, and we can have the account reviewed for margin approval. If someone is looking for the portfolio margin, the minimum funding is $175,000, and you do have to maintain the balance above $150,000 at all times. Portfolio margin requires additional approval. It is based on your overall trading experience, your strategy, your risk, your financial well-being. So there's a lot of factors that go into approval for that higher leverage, but it is something that's available. So if someone is looking for that, you can reach out to our sales or service team, and we can walk you through the process for applying for either a new or updating to a new portfolio margin status. The main takeaway is the 25,000 requirement is gone. You can trade with no trade count limits as long as you stay above the $2,000 level to keep that margin account active. You can day trade with no trade count. You just have to make sure that you are within your allowable buying power and you're not creating a margin deficit. There's some different ways to create those margin deficits, whether that's day trading and then holding overnight, or holding and during the day and funds, you go into a loss and you're not able to maintain the position any longer. So a couple different ways to meet those calls. Depositing funds is always acceptable and sometimes the only method, but liquidation is available and market appreciation or P&L. So there's a lot of ways that are favorable to the trader to be able to meet these type of calls, and liquidation will satisfy most of these calls, which didn't always happen in the past. A question is, if I held a stock which started the session at 25% requirement and then due to the volatility or risk involved, it gets increased to 100%. Does my account get recalculated 100% or will it remain at 25%? It would get recalculated to that 100%. So if there's a change, you would have to be able to maintain that change. Liquidation would probably just satisfy that type of call, but it would generate a call if you held it and didn't have the full 100% to hold it. So those changes don't always happen, especially when you're in the middle of holding a position, but certainly it can. We would do our best to reach out to you, but if you close that position by the end of the day, that should satisfy the deficit. If you do hold overnight, it would get applied at that 100%, and then it would have to be calculated to see if a call was created. So yes, you just have to be aware certain symbols can change their margin requirement, and a lot of that is scenario specific. Was it done just by Lightspeed itself, or was it done overall due to the price of the stock or some other calculation? So if it was a Lightspeed change, it may not create a call, but if it was an industry change that a security was no longer eligible for margin, then that could create that type of call. So definitely something to be aware of. If you have the buying power and then a stock gets increased and you no longer had the buying power to hold that increased requirement, we would most likely reach out to you to see how you plan on managing that position, as it would need to be liquidated at some point to avoid a call. But we're always willing to work with you. Some of these situations will be new for us as well. Just reach out to us. The more you can speak to our risk and margin team, the better you'll understand it, and we know that you're monitoring, and we can work to satisfy calls to keep your account in good standing. It's the accounts that are consistently generating deficits and doing activity that is creating those type of scenarios consistently are the ones that may have more to be under review by us. Anyone looking to try this software, if you are not a current customer, just go to the top right, the free demo button. You can request a demo for the Lightspeed Trader software, do some paper trading on it, see how the the stock trades work, how you can customize the software as well. Very customizable platform. Hotkeys, hot buttons, custom orders, scanners, all part of the trading platform. Take a look at some of our new account promotions here. And if you're looking to open an account, click on that open account button to get started. Anyone looking to do a walkthrough to go over the software, just reach out to our support team here. And you can even schedule a call with the sales team if you want to book a call and do a walkthrough and a screen share. For an account opening as an LLC, it will require a $25,000 minimum deposit, and an account is designated as a professional account. You will be subject to pro data fees, so that is going to be a higher monthly cost for the LLC or corporate account. So keep that in mind if you want to proceed with that type of account. If you are using the web and mobile platform, there are no monthly software or market data fees. So you can use our web and mobile. If you're someone who's just getting into trading, you don't maybe feel the need for an advanced platform, certainly take a look at the web and mobile. There's no monthly cost for that. There's still commissions that are charged, but it doesn't have the monthly fees. It's not as advanced. It doesn't have the same hotkey functionality or level 2 data available, but certainly it will allow you to customize charts. It has some scanners and watch lists available, and we do offer a demo as well if you want to test that out. If you do have the Lightspeed Trader software, you can request to be enabled for the mobile app as well as a backup to use. So if you want that as a secondary option, that is available as well. If you hold a position overnight and you generate a margin call, or now known as that margin deficit, we're not going to automatically liquidate you unless it's in a risk position, meaning you're losing a significant portion of your account. You would get that call, would be created, you'd receive an email notification the next day with instructions on how to satisfy that call. So by the due date, you will have to liquidate that position. And if it's past due, then Lightspeed will liquidate it. But we certainly attempt for you to manage your own account and manage your positions. It doesn't require an automatic liquidation if you create that call overnight. But if it's past due, then it will be required to be liquidated by our margin team. But certainly, we do have the right to liquidate at any time you are in a margin deficit. So that's always a possibility. We try to reserve that to when necessary, especially in a risk situation, but you just have to know that it is possible. But if you just liquidate that position or you're bringing funds, you can satisfy that call without any restrictions on the account. If anyone has any additional questions, just email our team, service@lightspeed.com. We'll certainly review and reach out to you. If you have questions on any margin calls you created, just call or email us. We'll certainly help with explaining the scenario, how the call was created, and how to meet the call properly as well. We're certainly here to help. We don't want your account to be restricted. We don't want to have to liquidate for you. We want you to be able to manage your account, to know where you stand, and to be within the allowable limits to allow you to trade as you see fit. That's our goal. We're going to keep improving our processes, our notifications, and our systems to meet those goals. So guys, I thank you for joining. As I said, we do have a recorded version of a similar presentation on the site here. So if you want to rehash some of this you can review this recorded webinar. And certainly we do have many other webinars here in our education section. You can view our past recordings or see our new schedule. We have one for Sterling coming up here. And then our past webinars, how to do pro layout, short selling setups here, how to trade with the system, how to learn how to determine what's available for shorting, how to request shorts, how to do hotkeys and buttons, how to trade options on the software. So we have a lot of topics and resources that we try to provide. We also have various short tutorials and videos on quick topics, level 2 data, margin, charting. So go through the website, use the resources, and then reach out to us. Thanks for joining. Thanks for the interaction. Thanks for the questions. But if anyone has questions, as I said, just reach out to us. We're happy to go over it individually as well. service@lightspeed.com, or anyone looking for a new account, go to sales@lightspeed.com. Have a great rest of your summer, everyone. Please just let us know how we can help. But thank you guys for joining, and have a great night. Take care.